we're going to take a look at Amanda's campus delivery at doing the transactions, including the debits and credits part of it. And so we'll only fairly quickly go through the part that we've already done, where we've decided what happened, which account. I'll still be going through those, but that's quickly. If that's confusing you, please go back to the Analyzing Transactions module to further refresh yourself on those videos. This is primarily about the debits and credits. And so let me put here that an increase is a debit for A, which is assets, W, which is withdrawals, and E, which is expenses. And then an increase equals credit for L, which is liabilities, I, which is investment, owner investment, R, which is revenue. Okay, so this is our debit credit chart, and this is in D2L, but I just went ahead and typed it on here. Other things that are on here is Amanda's campus delivery chart of accounts and her transactions. So we're going to be going through those. Recognize that the chart of accounts, here's all the assets. They start with a 1, the liabilities start with a 2, owner's equity starts with a 3, revenues with a 4, and expenses with a 5. So all chart of accounts are always in that order. Okay, we're also going to take a look at putting these on sheets, and this is going to take more than one video. So this is the first part of the video. We'll get as far as we can, and then you'll have to go on to the second part of the video. So the first transaction, Amanda Adams invested in a business $2,000. Okay, so now we're going to take a look at our analyzing sheets. So here we have to look from the eyes of the business received cash, and our other line is owner investment. Then for which accounts, we have to choose an account for cash, and here is an account for cash, and we have to choose an account for owner investment, and that's always this capital account, AA comma capital. So we got cash for the received and AA comma capital for the account name for the give up, matches owner investment. Okay, so what kind of accounts are these? Cash is an asset because we own that checking account, and this is owner investment. Then we go to increase or decrease, which we go to the top. Does the business have more or less cash than it did 5 minutes ago? Well, it didn't have anything 5 minutes ago, so that's an increase. Does the business have more owner investment than it did 5 minutes ago? 5 minutes ago, there was no owner investment, so yes, this is an increase as well. Okay, so now here's where so this is the part that was already done last week, chapter 2. Okay, so now we come to the part of chapter 3, where we have to choose the debit or credit. And here's where we have to look at our debit credit chart. I have an increase in an asset and an increase in owner investment. Okay, so I go here, I find asset. Okay, here's asset here. I find asset, I go to the top, I say, do I have an increase? Yes, there is an increase, so that means I am going to use debit for that one. For the increase in asset, I'm going to use debit. The other one was an increase in owner investment. So I've defined investment. Here's investment. I go to the top. Do I have an increase? Yes, it's an increase. So that's going to be a credit. Okay, so here's my increase in asset. I said that was going to be a debit. And here's my increase in owner investment, and that was a credit. My final step is to say, do the debits equal the credits? That means, is there as many dollars in debits as there are in credits? If the debits are equal to the credits, then the accounting equation automatically is in balance. Notice that we don't have any A equals L plus E where you have to put pluses and minuses anymore. This is analyzing transactions part 2. So it deals with the debits and credits part. I have one debit and one credit, so yes, they are equal. If you have two debits, that doesn't equal. Two debits does not equal 0 credits. If you have two credits, that doesn't equal either. Two credits does not equal 0 debits. Okay, you need one debit and one credit. If you have two debits or two credits, you got something wrong. One of these is wrong. Okay? All right, now we'll go to the second transaction. And that is that we bought delivery equipment for cash, $1,200. Okay, so we bought delivery equipment for cash. So what did the business give up? It gave up cash. What did the business receive? It received some equipment. Okay, now what are the account names? For cash, for the give up, we know the account name is cash. For the equipment, I need to look that up. So I look up on my chart of account. Okay, we have an account called delivery equipment. So that's what we need to put in here. You have to use what's on the chart of accounts. You cannot make one up except for those little assignments where there's only a few transactions and they didn't give you a chart of accounts so you could make one up. Okay, what kind of account? Cash is an asset. We own the checking account. And delivery equipment is an asset. We own the delivery equipment. We go back up to the top. Does the business have more or less cash than it did 5 minutes ago? Well, it paid it out, so now there is less cash in the checking account than there was 5 minutes ago. What about equipment? Do we have more or less equipment than we did 5 minutes ago? Well, 5 minutes ago we didn't have any delivery equipment. Now we have some, so there's an increase in assets there. So now this is what we did last week. So now we're looking at debit and credit. I have an increase in an asset and I have a decrease in an asset. So I go to my debit credit chart. Okay, I find asset. Here's asset. I have an increase. Yes, that's a debit. But for the decrease, which is opposite of increase, I'll have to use the opposite of debit, which is credit. Okay, so here's the increase in asset here. So that's going to be a debit. And here is the decrease in asset, which is opposite of debit. So that's going to be credit. Okay, now I have one debit and one credit. So that's good. And I say yes, my debits equal my credits. Okay, so here we go to the third transaction. And here we bought delivery equipment on account from Big Red Scooters, $900. And okay, so we bought delivery equipment on account this time. Last time we bought it for cash, but now we bought it on account. Okay, So go back in here. Okay, we received equipment. What did we give up? We gave up not cash today. Yes, we'll have to pay cash in the future. But remember this question, what happened is what happened today. Today we gave up the fact that we owe out to vendor. We took that obligation on our shoulders. Now I need to find an exact count name for equipment, which we already know is delivery equipment. And we have to find out an account name for owe out to vendor. Now, because we've used this key word of owe out, that tells us it's going to be a liability. I go to my liability section. There's only one, accounts payable. Okay, so that's going to be accounts payable, which I can put A/PAY. And it is, as we said, a liability. And this delivery equipment, we own it, it's an asset. We go back to the top. Do we have more or less equipment than we had 5 minutes ago? Well, 5 minutes ago we had one piece of delivery equipment, now we have two, so that's an increase. Okay? Do we owe out more or less to the vendor than we did 5 minutes ago? Well, we owed out nothing to a vendor 5 minutes ago. Now all of a sudden we owe something to a vendor. So we owe out more to the vendor, so that's an increase. Again, this is stuff that we already had last week. Now we need to put in the debits or credits. So we have an increase in assets and an increase in liabilities. So I look at my debit credit chart. I look up assets. An increase is a debit. And I look up liabilities. An increase is a credit. Okay, so this increase in assets, I said was a debit. And this increase in liabilities, I said was a credit. I have one debit and one credit. So my debits equal my credits. I go to the next transaction. And that's, we paid the first installment from transaction to Big Red Scooters, $300. So here's where the very next day we paid a payment on this scooter that we received on the 5th. Okay, we owe out $900. We only paid $300, a third of it. Okay? Okay, so we gave up, we made a payment. So we gave up cash. What did we receive in exchange? We did not receive today another scooter. We already received the scooter in the past. What we received is a lightening of the load on our shoulders. We owe out less to vendor. Okay, so for cash, for give up, I'm going to use cash. For owe out less to, when we owe out to vendor, we use accounts payable, which is a liability. Cash is an asset. We go to the top. Do we have more or less cash than we did 5 minutes ago? We paid it out. So we have a decrease. Do we owe out more or less to the vendor? Well, we said it right here. We owe out less to the vendor. We now only owe $600. We did owe $900. Now we only owe $600. Okay? Now I have a decrease in a liability and a decrease in an asset. So I look up asset. Do I have an increase? No, I have a decrease. So it's the opposite of debit, which is credit. And I had a decrease in liabilities. I look up liabilities. Do I have an increase? No, I have a decrease, which is going to be an opposite of credit, which is debit. So I'm going to debit the liability and credit the asset.